All right, before we dive in, just a quick heads up, this is not financial advice. All the information we're talking about today is from public sources as of January 2026. For your own investment decisions, you should always consult a professional. Okay, with that out of the way, let's get into it. So here's the thing. The AI revolution. It's happening, it's huge, but it's about to slam into a massive brick wall. And that wall is power. The amount of sheer energy it takes to run these gigantic data centers is just mind-boggling. Big tech is scrambling, looking for clean, reliable, around-the-clock energy, because the grid we have right now, it's just not going to cut it. And right in the middle of this energy crunch, a company called Oklo enters the chat. This advanced nuclear startup just signed a game-changing deal with Meta. Yeah, that Meta, one of the biggest tech giants in the world. And this one move has suddenly put Oklo in the spotlight. And it raises the huge question we're here to break down today. Is this the company that's actually going to power the future of AI? Or is it just a super risky bet on tech that isn't quite ready yet? First things first, let's talk about the massive catalyst that put Oklo on everybody's map. I'm talking about the deal with Meta, announced back on January 9th, 2026. You gotta understand, this wasn't just another press release. This was a huge validation of Oklo's entire reason for being. So let's really dig into the details here. We're talking about a 1.2 gigawatt campus, that's a lot of power, built specifically for Meta's data centers. But the most important part, the real kicker, is the financing. Meta is paying up front. They're prepaying for the power. Now, why is that such a big deal? Because it gives Oklo what's called non-dilutive capital. It means they get the money to build without having to sell more stock and water down their shares. It takes a huge amount of risk off the table for them. And it's not just the Meta deal. The whole regulatory side of things seems to be clearing up way faster than anyone thought possible. The Nuclear Regulatory Commission, the NRC, accepted a key design report in just 15 days. That's lightning fast. Oklo also has access to a new pilot program from the Department of Energy, and it's all backed by something called the Advance Act, which was written specifically to slash the red tape for these kinds of advanced nuclear projects. So what does all this mean? Well, it sure looks like the government is actively trying to push this forward. And of course, Wall Street definitely sat up and took notice. Right after the Meta news dropped, Bank of America upgraded the stock from neutral to buy and jacked up their price target to $127. And their reasoning? They called Oklo, and I quote, the most leveraged public SMR name to data center demand. SMR, by the way, stands for Small Modular Reactor. And that quote, well, it tells you pretty much everything you need to know about how the big money is starting to look at this company. So we've talked about the big news, but what exactly is this technology that's got everyone, including a giant like Meta, so excited? To get that, we need to look at Oklo's main product, the Aurora Reactor. Now, the first thing you need to know about the Aurora powerhouse is that it isn't some pie-in-the-sky sci-fi concept. It's a small, advanced reactor, sure, but its design is actually based on the experimental breeder Reactor 2. This was a real-deal reactor that ran successfully for 30 years right here in the US. And that is a critical point. Oklo isn't starting from scratch, they're building on decades of proven technology, and that cuts down the research and development risk in a huge way. And this is just fundamentally different from what you probably picture when you hear nuclear power. You know those giant cooling towers? Yeah, this is not that. Instead of these massive custom-built projects that take billions of dollars and decades to finish, Aurora reactors are small, they're modular, they can be built in a factory. They also use what's called passive safety. That just means they rely on basic physics, things like gravity and natural airflow, to shut down safely, not a bunch of complex pumps and backup generators. On top of that, Oklo's whole business model is different. They build, own, and operate the reactors themselves, selling power directly to customers like Meta. They're cutting out the old-school utility company entirely. And here's another thing that really sets them apart. Their fuel strategy is incredibly flexible. Short-term, they can use existing materials from the government. Mid-term, they'll get specialized HALEU fuel from partners. HALEU is basically a more efficient type of nuclear fuel that a lot of these new reactors need. But the long-term vision? No, that is the real game changer. They plan to recycle used nuclear fuel at their own facility. They want to turn what we currently think of as nuclear waste into a new source of clean energy. Having all these different fuel options is a massive competitive advantage. Okay, the tech is compelling. The Meta deal is a massive thumbs up. But what about the stock itself? Let's get into the numbers. As of late January 2026, Oklo's sitting at a market cap of over $13 billion. But And this is a big but. Just look at its history, a 52-week high of nearly $194. This thing has been on an absolute roller coaster. So let's be clear, this is not a stock for the faint of heart. That extreme volatility tells you just how much speculation and high-stakes potential is baked into this company's price. And you absolutely have to remember, Oklo isn't making any money yet. They're what we call a pre-revenue company. In their last quarter, they actually lost more money than analysts expected. The company is in full-on growth mode, spending a ton of cash to get these projects off the ground, which means any actual profit is still years and years away. But, and this is what the bulls will immediately point to, look at their balance sheet. The company is sitting on a mountain of cash, $1.2 billion. That is a huge cushion. It gives them a very, very long runway to get their plans in motion without having to go back to the market begging for more money anytime soon. This war chest is a key part of the whole bull case for the stock. You know, if you want a perfect picture of the debate raging around Oklo, just look at what the analysts are saying. On a low end, you've got a price target of just $14. On the high end, over $183. That massive gap tells you there is absolutely no consensus on Wall Street about what this company is worth. It is the textbook definition of a high-risk, high-reward story. Okay, so far it's been pretty exciting, right? But now we have to pump the brakes a little and talk about the red flags. For every amazing opportunity with Oklo, there's a very real risk that could throw a wrench in the whole thing. We need a serious reality check here. So let's not sugarcoat it. Here are the risks. Oklo is burning through cash and won't see a dime of revenue for years. That first plant for Meta, it's not even scheduled to come online until 2030. Any kind of delay in construction, in the supply chain, in regulation could be a major problem. They also have some really stiff competition from other well-funded nuclear startups. And finally, something investors always keep an eye on, there has been a significant amount of stock sold by company insiders recently. So, where does that leave us? After looking at all the good, the bad, and the, well, nuclear, how do we wrap this up? Let's put the bull case right next to the bear case and see how they stack up. On one hand, you've got the bull case, and it's a pretty compelling story. Oklo is the most direct way to invest in the insane power demands of AI. The Meta deal gives them validation and funding, they've got that huge pile of cash, and the government seems to be helping them along. But on the other hand, the bear case is just as simple, and you can't ignore it. They don't make any money, they face huge risks in actually building this stuff on a long timeline, they have tough competitors, and insiders have been cashing out. And so it really all boils down to this one massive question. Oklo is sitting at the perfect intersection of two of the biggest trends on the entire planet, artificial intelligence and the shift to clean energy. If they can pull this off, if they can actually execute their plan, the potential upside is just astronomical. But the road from today to 2030 is very, very long, and it is filled with some pretty major risks. So I'm curious, what's your take on Oklo? Is it the real deal, the future of energy for AI, or is the risk just way too high? Let me know what you're thinking down in the comments. And, as always, just a final reminder that this was for educational purposes only. You should always do your own research before making any investment decisions. Thanks for watching.